Let's take a look at the S&P futures. Okay, since last week till now, we are having 2 down days, and beginning of this week, it starts to move up. So this down created a havoc over the weekends, and the whole Asian market just got down very badly, and I think caused a little bit of panic. But then it recovered for Tuesday and Wednesday. So in this, one thing about this US market is that the indicators are all pointing down. Meaning you say you look at the short-term moving average and the medium-term moving average is like turning down. You look at a stochastic, it's pointing downwards, and this is not really a good sign where the market is moving up, but the indicators are pointing down. This is the actual S&P index. All right, you can see it's starting to trying to curve downwards, and you have this indicator stochastic pointing down, from the overbought region. So we just have to be mindful and careful. And at this moment, the futures is up. You can see here, it's up 17 points. Okay. Now for Dow Jones Industrial Average, it's about the same, but I just want to point out something. Okay, during the Great Depression, there is this 3 months of down. It's a very fast one, and then followed by a small rebound. Okay, and as the time goes by, when the depression hits over the next 3 years, the whole stock market just slowly move downwards, month by month, week by week. This is let's look at the week. Okay, so this is what happens during the Great Depression. So you can see a very fast down movement, and then roughly about 4 months of rebound. Okay, and then the next 3 years is a small movement downwards. All right, so if we move back to our current era, what we are seeing is roughly a similar issue. We have a very fast move downwards. This one is like 1 month, and a rebound, and now it's already stretched like 2 months. Okay, so I'm not too sure what is going to happen. The whole world is trying to recover. Some countries are trying to relax, ease the economy back. But the actual, what I call, impact of the COVID virus, like the how are the countries going to hold up their economy, with their debt issue and issuing of quantitative easing, and the impact of bankruptcy that's going to ripple through the economy. Like for Singapore, first we have Hin Leong, the oil and gas, and then recently I'm not too sure the company, but we have another oil and gas company that is also filing for bankruptcy. So there will be more and more such news as the time goes by. Let's look at how Singapore is doing. Last week I mentioned that I'm looking at Singapore hitting around this trend line resistance. So what it did is try to move off, and due to the overnight shock from the US, there's a gap down, and it's trading along this trend line, which means if it continues to do that, it is not a very good sign, and it might just break down this trend line and probably start a second wave. We do not have the crystal ball to see that, but this is what the chart is telling me at the moment. So let's go on to the investors. As investors, what should we be looking at? Okay, this is Capital Mall Trust. Okay, it is forming a very nice base pattern. It shows that this is the value, like between 20 to 30% discount to book value is where the investors are looking to buy and accumulate the shares. So there's one news that came out with Capital Mall is that they are delaying the extraordinary general meeting to vote for the merger between Cap Mall and Capitalcom. All right, so there will be delay in this. Firstly, was projected as June to complete the acquisition, but with this news, most likely it's going to be delayed to like September or August. And the whole deal, right? Their end date is supposed to be in September. So I believe they have enough time to finish the whole deal. This is Escort Trust. Among the hospitality, I think I like this because of its diversity and it's spread all over Asia or in the world. They even have hotels in the US. So at this moment, it's trading roughly about 32% discount to book value, giving a yield so-called, oh, there's no yield here. The yield roughly for Escort is between 7 to 9% of this price. But as we know, the revenue I saw dropped. They don't have much revenue, and therefore, in this moment of period, we should be expecting like 4 to 5%. Okay, but as the economy starts to return, we should, if you have bought at this price or accumulate at this price, it will be like 7 to 9% dividend yield. This is Sasia REIT, with China trying to ease up and open up the economy. This has shown a strong rebound. It tried to make a new high and still trading just below this resistance of like 73 cents. So let's see how it turns out, for this stock. Okay, and it's running like roughly about 9% with a P ratio of 6.8 and a 20% discount to book value. Okay, so this is a retail outlet store in China, mainly in China. Valuetronics, I mentioned about this stock last week, and then the next day it moved up, and then due to the US thing, most of the shares also dropped down. So this forms a nice cup and handle pattern. So let's see if we can move off this area of 65 cents, and with this move, right, hopefully we can go to a max price of 83 cents. Okay, and as I mentioned in the last video, this has a P ratio roughly about 7. A dividend yield at the moment is about 7%. Give or take, the next 1 year probably a discount to like 6%. So how it is that the total current asset right now is greater than the market cap. It's quite a big value. So this is quite an undervalued stock. Okay, something new. This is Jardine CNC that does distributions in consumer goods, cars, industrials, dairy farm, Guardian. So Jardine CNC currently is trading at a P ratio of 6.5, giving a dividend of about 6%. You can look at the return on equity is roughly about 13% here. Right, and it's roughly about 10+% discount to book value. So if you're looking at the whole Singapore economy recovering, people starting to have jobs, have money, and start to buy cars and all this stuff. So this is a stock that we can look at to invest in, though it is a high price stock. So as I mentioned before, this stock is a weak stock. Okay, that's why as investors we look into this. There is a breakdown with high volume last week, and it's consolidating sideways on low volume. Okay, the volume is dropping sideways, which means that I'll be expecting more downside for this particular stock. Most likely it might test the support area here, about $16. So this is a fair bit. For those who want to short like a small short, you can do this. Okay, one stock that came up, haven't really looked into the valuation of this stock. This is called Franken. It does electronic components, and it has a very nice rebound. Same with other electronic stocks like Valuetronics, UMS, AEM, IP. So what I did is there's quite a lot of volume coming in just below the resistance here. Okay, so they're absorbing all the sellers. No, most of the sellers are stuck here, and they are selling over here. All right, so let's see if we can make another small little cup or trade sideways and see if you can break over here to invest in a longer term. Projection where it might go between what, 94 cents to $1. So this is Franken, and what it has right now is about 4% dividend yield, 7P ratio. It's just about book value. All right, but it has a ROE of 15% and an ROI of like around 15% too. Okay, so these are stocks investors should be looking at, and see if they can invest in this at a nice price. Now let's talk about the stocks for trading. The stock that did, there's an X-ride happened today for SIA, and I do not know why everybody are asking me about can we buy SIA or not. To me personally, I would not like to buy airline stock at the moment, though we know Temasek Holding is supporting this stock, and but the thing is they just need the cash to survive this whole crisis, and we do not know how long before the first plane can fly, because from my view here, I've not seen a plane fly by my place for a long time. All right, so what most traders did is what happened is this long rebound in the morning, it's like almost a dollar. The medical stocks are coming back again. This is MedTech. There's a huge rally, about 4 cents up. Due to this, announced its first quarter results during the COVID crisis, and it has a huge percentage increase in net profit, like 1,500%. Okay, so this explains this huge jump. So from here, we should be looking at people. There might be another move, another day run, when this news finally gets out into the Straits Times tomorrow. So there might be another run. From there, we look for a new pullback to go into this stock to trade. So if you think you have missed this, you can look into other stocks like Biolytics, whom I've heard that they have some deals to export their test kits to US. So there's an increased volume coming in, buying into the stock. But do bear in mind that there are a lot of sellers waiting here who are holding at a loss. Mentioned AEM is the strongest stocks in Singapore. Okay, last week I mentioned about this, is still trading here. And Wednesday it had a breakout. Okay, and the next 4 trading days it has made a new high right now. Okay, so we are looking for a pullback, to trade sideways. With this selling here, it's likely to trade sideways, and from here we look for a setup to go long. This is Maple Commercial Trust. Okay, and it has done a nice base formation here, though it's only like a 1-month period. It's a small base, so most likely we might be looking at a reversal here with probably target area $2.30 to $2.35, 36. All right, so at this moment it has a nice pullback with lower volume. So if you want to trade, you can look at opportunity to trade for this breakout over here. Okay, so this is it's doing a nice cup and handle pattern, and it's doing another handle pattern over here. Sheng Siong, a nice rest over here, and today had a move up. So it's trying to test its resistance. Usually in such case, it's two possibility. It test and rest sideways before it break out, or if there's good news overnight in the US, it may just bash through and move off tomorrow. Okay, this is high B. Past week, it did a nice breakout and move off. So from here, we like to, this being a red bar and some selling coming in, most likely there will be a pullback. So from here, we can look for a setup to go long. Now, this is something that I've been monitoring. It did this big down and then retest the high, this previous high over here. And there is a tremendous volume that comes in. This type of volume is usually a merit trade. Now, when this thing happens and it starts to move down, meaning to say the sellers are coming in. All right, and with most of the indicators turning down, I do not know where this one will take, because if this one were to fail, which means the whole bear market is here already. And as leaders, right, as market leaders, they will also lead in the down move. So this is what I usually tend to monitor. So this is Keppel.
I think just to add on that merit trade deal is, I think Keppel TNT is selling a percentage of their stake to, I can't recall who's the buyer there. Yeah.
Okay, can. Thanks. So I mean, they sell the stakes. So most likely, it's a smart move lah. They are selling at a high. Is currently, I don't know whether how to price this. It's only a 3.2% yield with a P ratio of 30. And as you know now, most of the stocks, company stocks that we have in Singapore is running at a P ratio of like 10 and below. So this is running at 30, and it's 2 times the book value. So to me, I think it's overpriced. All right. So that's all for the Singapore market. Just do a follow-up on last week's videos on the Hong Kong stocks that I mentioned. This is E-Hai that does all the condiments for Hai Di Lao. So this is a very strong stock, and today it has a breakout today, right? With good volume. So this is nice. Most likely it might carry on. And if you look at this E-Hai, then we better look at Hai Di Lao too. Okay, Hai Di Lao, since its IPO, right, it has already doubled in price, and this due to closing and COVID is retracted, and currently rebound and testing and making a new monthly high. All right, so from here, if you like to trade Hong Kong stocks, more volatile, you can look for a setup here to go long. This is the car market in China. Brilliance doing BMW. So last week I mentioned about this stock is over here, so it went up to test this resistance. All right, so this is a nice short-term base formation. So let's look at the pullback over here and see if you can trade over here, break this 200-day moving average, and finally turn up to the head of this mega base formation. All right, so if it successfully tests here and break this $10, it might mean a long bull trend to come, like this. Okay. So if we look at this BMW, then we look at the China GD Auto. So it has a similar pattern with Brilliance. Trading a very big pattern here, and it's base formation over here. So right now it's coming off the lower end of the base formation. So this has quite a big trading range for one to trade. Okay, so now just today it has a move here, so you can look for a setup, to go long from here. Okay, guys, that's the end for today's debrief.